2 testing. I've got someone in the chat. Whoever that is, can you let me know if you can hear me, please? Yeah, I think we're good actually. Okay, we are live. Right. So I'm using a mic that's not the one I plan to use. Anyone in the chat, can you let me know if you can hear me and if I'm loud enough or if the music's too loud? Let me know about the volume, yeah? Okay, well, my voice isn't loud enough, yeah? I can't get the chat on the screen. I've got to use my phone, which is rubbish. Right. Just put this on the cushion. Alright, how about now? Tell me how that volume is. By the next time I will have my other mic sorted out. I just didn't really have time to sort it out, you know, but for now this will have to do. Tell me how that sounds. I might get 1 minute here. Okay, so we're paper trading today. I'm not expecting much in the PM because we've had such big moves in London and New York, but we'll take something if we get it. So it looks like we might get an entry here, even though we've had a 5-minute inversion to the downside. I'm mostly bullish because we've had a 15-minute IFVG on this side, and I expect to run out these highs, so I'm bullish on this. If we get this 1 minute close here, then we'll be going long, because as you can see, accumulation, manipulation, tapped into a fair value gap, and now we're about to invert this 1 minute to the upside. So this will be a trade that I would actually take on an eval or funded. Lower risk because volatility will probably be so. I mean, if this was a kill zone, then I'd be more confident in it. But as you can see, we could continue to range here. So I want to see how this closes. It's not a decent close. We've got indecision candle there. Let's see how we do on this one. This is our 1 minute template there actually. Nice push tail, I like the look at that. Why can't I see what I need to see here? We'll wait for the candle to close, doesn't matter if it pushes away. Why can I not see my templates now? Getting annoyed. There we go. Okay, so still 30 seconds left on this candle. And I'm definitely bullish to run out. We've got some equal highs to the left here, which I'm a little bit late on this today, so I haven't been able to show you the setup completely, but let's just enter this and see if we can get a decent trade. Not the best close, but I'll take it. Stop just, I would say, quite a tight stop on this. In fact, a little bit more. Give it some room because, as I said, we are in the macro. I've just entered the macro, so I'm confident on it, but we'll see, give it a bit of room to breathe. We've had our sweep. I'll put that at the bottom of the candle that's created this fair value gap here. Just put it there, that would be a decent stop. And now if we go to the higher time frame, sorry, I'm not really paying attention to the chat, 1 second. Cool, yeah, so just let, oh fine, so the volume's fine, good. Alright, let's look for targets. So we've got these equal highs here that we expect to run at the very least. Let's just say if we were going for a decent 1 to 2. 150, we're looking at 300. Let's see if we can get on an Audi here, an Audi high. So I'm not completely prepared. I literally just got to the computer, but I expect us to run out some of this new day opening gap. but from a while back actually. And the reason for this trade, just so you can get a bit of background, is we have inverted this 15-minute. What I trade is inversion fair value gaps, IFVGs. So the fact that we've inverted this 15-minute here, if I'm just going to show you, won't worry about targets and stuff for now because I'll sort that out in a minute. What's more important is you see why we take this trade. So as you can see, we're pretty bullish. I mean, overall, this is the next level of liquidity, this high here. Okay, since New York, we've been moving up. We've inverted many gaps on the way up, and we've come above yesterday's previous daily high and inverted that, tapped onto it, and continued up from it. Then we get this accumulation, this manipulation of these lows here. So that's our manipulation. This is our model. We tap into a gap here, sweep some liquidity, and then we get our inversion fair value gap to the upside. And we've also inverted a 15-minute here, right at the last, before we hit this liquidity. So a decent area. I mean, there is in future, you know, you might think, oh, well, are we going to retrace more? Are we going to do this? Try not to overthink it. If you've got an inverted fair value gap on the 15-minute and then you get one on the 1-minute, then you just enter in all day long on that. There's 2 inversions there. Okay, and you're at least looking at 1 to 2. So let's say if we're risking 150, and then we just take 300. I mean, we're likely to dig, if we do go up from here, we're likely to dig more into this new day opening gap. But yeah, that's pretty much the idea behind the trade. It's pretty simple. I mean, I just wanted to go back and have a look at something else just while we're here on the daily. Yeah, so we did have this daily imbalance below, which is always a bit unsettling because at this point of the day, when you've had such a bullish move, you can just turn around and dump. But this is the setup, that's the entry, and I would take this one all day long. Need to sweep liquidity. Yeah, so the liquidity that we've swept is on the lower time frame. It's if I just point it out again for you, this is our accumulation, this is our manipulation, which is this move down here, and that swept this liquidity. So you don't need a massive sweep on liquidity. Try to remember that when we have a liquidity sweep, it need not be a massive high or low, especially if you look at the context. We are likely moving, we've already swept, for example, all of this here. Let me just come down off the daily, sorry, 15-minute. In New York, you can consider all of this as liquidity. Well, if you look here, this is our main liquidity sweep from, I believe that was New York, wasn't it? New York's here. So pretty much from London, we've had this sweep of liquidity down here. We've been moving up. And then we've had a few sweeps on the way up, and we can be confident that the next draw on liquidity is this high. So if we can get a trade before we get to that high, then we're still in that leg. We're still. So it's more of a continuation trade, which is why I've gone down to the lower time frame for the accumulation and the manipulation distribution. It's a small move, but it's enough. And of course, if you risk high enough, you're going to get decent money out of that. But just to answer your question. The sweep of liquidity is this here. This is a sweep of liquidity here. It doesn't need to be massive, especially because we're already approaching a key liquidity level, and I'm quite confident that that's what we're aiming for now. So I'm just trying to get my trade in before we get to that high. Now, what I would do is mark out that high, because once we do tap, you can notice that our take profit is just a little bit higher, which is not entirely necessary. You could just have it at the high, depending on how much risk you put on. And let me just quickly look at where the other high is. Yeah, so we've got this second high here. So I'd be confident that we'd reach this high also, but I'd be wanting to move to break even at this high here. Where's that? Okay. And because of the time of day, because it's a PM session, there is the potential for it to be a break-even trade. It's just something that you gotta take in. I see my templates all messed up. I've got to set them up again. Alright. And that's it. You let it play out. There's nothing else to be done. textbook AMD model. It just might be a bit slow because of the time of day. Can you guys hear the music at all or not? See this gap hold here, ideally. So we've swept these equal highs here. But if this wick wasn't here, we'd likely go break even here. So there's a chance that it comes back. We want it, at the very least, this 1 minute to hold. If we was to get a close below that, I'd consider closing the trade, but we'll see how it plays out and how the candles close. Yeah, you can hear the music. Alright, cool. Nice push there. I like that. Price action is actually pretty decent considering we've had some news today, haven't we, as well, so I guess we're expecting more volatility, but I mean, this is not that bad considering the moves we've had in London and New York, but I'm not going to speak too soon because it could just start raging. But anyway, any questions that you've got about this model or entries or whatever, just put it in the chat. Because I probably won't cover everything as much as I could or should. Yeah, so if we look at a little bit on the 15-minute here, see how we've dug down a bit into this 15-minute, got a pretty decent reaction out of that. And this here is our entry leg. And I'd be surprised if we don't at least get this first high, which is here. I definitely want that second high as well, we'll see. But as a 1 to 2, it's a pretty decent entry, I think. But yeah, with the PM session, you can be prepared to just sit through some choppiness, it is what it is. At some point, I'm hoping to be trading the New York session, but it's when I'm working, so it'll cost me money. As most of you probably know, I'm sort of mentioning this for people that are watching this in the future as well when I upload it. Okay, let me turn the music down and nice one, Tommy. Just put it like that. So if you can hear that still. I kind of sat back a bit from the mic. I've got a mic that you sort of connect to your, to your collar, but I can't get it to connect to my computer, so I'm using this bloody wired mic, and it's like it's just not the best, but hopefully you can still hear me enough. Yeah, maybe I'll just turn the music down for now. Let's put this in so we can see what this is. I don't know if all that right is making it messy. So another thing we can do shortly is go over the setup that happened at New York Open. Pretty decent 30-second IFVG, pretty similar to this entry actually, and just went straight to TP. So if I was trading that today, I would have been laughing. But as usual, working. But we're coming for that. We're coming for the New York session. Until then, we'd have to make do with the PM. Maybe the AM session with the PM. And I have seen some success in the PM session. I've managed to reach payouts in just trading mostly the PM session over October, November. So we'll see how it brings in 2026. At this point, could break above these highs here. I just want to see a close above that, and I'll be taking some risk off. In fact, I wouldn't want to be coming below the IFVG. Yeah, and we've got another 1 minute inversion here. You can see here. We've closed above that, and it looks like we're using that as support. I wouldn't want to take a full loss on this now. If it wanted to turn around to get some consolidation, I'd be happy to bring the stop here. So trailing your stop, there's no set rules for it. You know, you want to get to break even at this point because we could turn around at that point. Other than that, it's more intuitive. Just watch price, how it's behaving. This looks like a slow grind up. I'm pretty confident with it. That's a nice push. And just, you know, you get the eye for it over time. You know, this looks bullish to me, and I do expect us to move up. Don't go to break even yet, because sometimes we can get a tap back on this 1 minute a couple of times, especially in the PM session before going to TP. So you can see here, if we'd gone to break even here, which to be honest sometimes I would do depending on the arrangement on the price, then we'd have stopped out here, and that can happen. It has happened to me a lot. So I'm trying not to move to break even too early and give it a bit of room, as I said, especially in the PM session. But at the same time, at this point, if it were to take a massive retracement and get below this 1 minute, I'd probably want to be out about this point anyway. You know, and again, that can happen. It can come down here and go to TP, but I wouldn't be taking it. I wouldn't take a full loss on this now. Another thing I like to do, especially when it's hanging around like this, just give it a little equilibrium test, look at. And these days I'm going from candle to candle rather than wick to wick. It just seems to be more accurate. let's get a bit messy. I will clean up in a minute. So 50% is here, so it's at our IFVG. So if we did want a 50% tap, it could come here. So I may just give that this much more. I'm happy to put a 101 in case it wants to get that 50% mark. Give me a bit of space for that. Alright, let's tidy up a bit. We don't need this 15-minute in there. We know what that is. We need the 1 minute. We don't really need the order block. Just the 1 minute. We're looking like on the 5 minute. There's more about this trade as well. Yeah, so by the way, there was and there is, an SMT with ES, not a massive one. Nothing's actually swept the high, but NQ had inverted this 15 and ES had not. But if you look now, ES is now pushing through, using that support and pushing up. So that's extra confirmation that we're bullish as well, which is something that I forgot to mention. Because if we'd seen a massive reaction from ES to come down and that had inverted, I just wouldn't have had a trade because it would have been half and half. There is also a new week opening gap that we inverted, so afterwards I'll go over that as well. I don't want to mess up the charts too much. This one out closed in the top half. So let's break even there. Here it might be worth having a look at it. So, for example, new week opening gap was, why is it not showing me? Oh, here it is. From this open close here, opened here. Whilst we're hanging around, we might as well do something. So when this one here, let's have a look, that's not quite right. Have I got that marked out right? Opening gap, yeah. As you can see, we push up, we get a nice reaction, we close right above that, dip back into that, and then you can see we're pretty bullish from that new week opening gap as well. So tap back into that. I've actually just noticed now because I didn't draw it in. Yes, we actually tapped into that new week opening at 50%, and I didn't notice that because I've not had this drawn out, just got to the computer, but if I'd seen that I would have risked more because that's my textbook setup. Yeah, as I say, I had like 2 minutes to set up this trade before going live, but yeah, I'm glad I had a look at that. Let's see if we're going to get a retracement here now, break even. Yeah, that's it there. Okay, what high we're looking for? So this is the high we're looking for, and the next high as well. At this high, I would likely try my stop. Let's just see how the candles unfold. Okay. Radical. So that's going on, isn't it? nice, nice. Come on, keep it going. You know you want that high. You want that next high. Everyone knows it. I don't like this movement though. It's a little bit too. You know what I'm saying? We've swept a high there now, so with that type of movement, I'll probably trail my stop just into some profit. What I like to do from trailing stop, so you may not definitely get that next high, just go underneath the previous 2-minute candle there. And hopefully we get full TV. If not, at this point when we sweep a high like that, and some people might want to put their TP there and just take full TP, and that's fine. I expect us to get this next high, so I've left it a bit higher. If you don't want to and you want to put your TP higher, then just trail underneath this 2-minute here. So not this one, the one before it. And also we're dipping back into this new day opening gap. That's what this big grey box is a new day opening gap from way before, which I'll show you after. So that's another reason we can expect a reaction from that. But I'm feeling pretty bullish, so I don't mind taking a partial on it. It's just fine too. Let's go back to the 1 minute, see if we've got any gaps. No gaps there. 30-second gaps. This 30-second gap. So we've tapped it already, so we don't really want that to hold. Tie that gap nicely. Come on in, Q. TP, baby. Let's get it. It's as simple as that. Nice to win the first trade on live. I'll take that with a smile. Alright, let's break this down a bit so we can just get. What I'm going to do is just remove all of the drawings and just so we can get some clarity. Why did we take this? Actually, maybe that's not a great idea. Yeah, okay.
Your call has been forwarded to an automatic voice message system. At the tone,
Right, so quite simply,
when you have finished recording,
this is a new week opening gap that I had drawn out earlier but forgotten about it, to be honest. We had inverted that. We have inverted a 15-minute here. And of course, all in this area, you've also got this order block here. So when we push through an area like this with such force, we've got 15-minute gap, order block, new day opening gap, so new week opening gap, and we just come through it. And if you know how to read price, you got it. No, don't want that. And we push through, we bounce down, we tap, we push through again, we bounce down, we tap. This is just an obvious entry for me. It's like we're inverting business, and we're coming towards this high. So this high is always and we've got equal highs. So it was a pretty decent trade for me. It's not an A plus because we didn't have a massive sweep on liquidity. We'll get to A plus afterwards. But as we see price inverting these levels and then using them as support, of course, when we then get our entry, which is our 1 minute or 30-second, whichever find at the time. So as soon as I see this, I'm driving home, I'm seeing this, I'm thinking about I want to get in and get live because I know in my head we're going to just sweep and go up. So I already had this pictured in my head, and literally I think I started a live stream around here when it was just created the 1 second, was it 1 30-second, so I'm getting baffled. Initially I was looking at the 30-second because I thought it was going to be a small one like earlier, but we've got a 1 minute. Second, what have we got here? I really didn't think that was going to take off. Yeah, well, you know what? That's the thing. You sort of, you don't guess. You just go by the model because you can't. for me, this was, we had an S&T with a yes, but only because we'd inverted so many things and we were so bullish, and this was our drawn liquidity. For me, if you give me a 1 minute in these circumstances, I've got to take it. Even if I'm unsure, I've got to take that setup. You know. So we dip down, we tap back into. Did we get the? This is the 15 minute here. We tap into that. I think there might have even been an entry there. This one here. This is accumulation here. It's not as clean. And you might have had a 30-second there, but yeah, so there's an entry there as well. Accumulation, manipulation into the 15-minute IFVG, we tap it here, and then we get a 30-second, we can enter here as well, and you'd have had to sit through this, so this is a better one, and this is why we like to wait for the macro, because this is the lunchtime macro. This is the lunchtime, everyone's off on lunch, you get an entry, you sit through that, and then macro, everyone comes back, and you get your 1 minute, and you enter there. So just for anyone here who's not sure exactly how the entry works, we're waiting for a sweep of liquidity, which we get at this point. This is your accumulation, manipulation. We sweep these lows here, we tap into this fair value gap here, and we tap into this new week opening gap here, which for me is like one of the best. I love taking trades out of the new week opening gap or new day opening gap. It's very active. And here's your 1 minute. So you need to be able to spot your bearish 1 minute in this leg, which is here. Okay, and you might not spot that easily in the beginning, but that's what we're looking for. And my entry was here. As soon as we close, not here, not here. As soon as we close above this 1 minute, that's your entry there. Stop was a decent stop because of the time of day. It's PM. In the New York session, a lot of the time I'll put my stop pretty tight, like underneath the candle that created the bearish gap, so about here. But this time of day, especially because I saw this volume imbalance, sometimes it likes to reach for them. I had a wider stop, and also I had enough space for my TP where I could get a 1 to 2 with a pretty wide stop. All right, but that's all discretional. People are going to do their own things when it comes to stop losses. So we enter here. We had a pullback here into this 1 minute order block, a nice reaction. We didn't revisit that, which I like. And then as soon as we broke these highs here, we moved to break even, and our TP was just over a 1 to 2 because we had this high here. If this high wasn't here, we didn't have equal highs, I probably would have taken TP here. You see, and now it looks like we're creating more equal highs. I would imagine that we accumulate from here for a little while. But that's it. That's the move we wanted. That's the move we got. I hope you guys got in on that trade. If you did, then let me know. Put some W's in the chat. Yeah, but happy to win the first trade on live. That's what it's all about. All right, so what we could do now quickly, since I've got you guys here, let's see, we've got 4 people in the chat. Let's have a look at today's New York open trade, right, which was this decent push up we had here. All right, so actually let's get 2 screens back on again. 1 minute, 15 minute. All right. Yeah, okay, so this is London lows, isn't it? Yeah, cool. This is London open here, I guess here. We just pushed up and up and up through London. At this point, you know, we couldn't be entirely sure which way we're going, but in my head we were bullish, because whenever you get a big move down like this and then London trickles up like that, I'll be honest, I expected a deeper retracement. I wanted London lows and then longs, but sometimes this happens, so it's good to be prepared for this. If this does happen, you still take your entry, and I'll show you where the entry was here. Oh yeah, okay. So today it was a 30-second entry, so you need to be able to, let's get rid of all these drawings. You need to be able to identify a 30-second IFVG as well. So pre-market, we're just accumulating all of the, I mean, from here we're moving up, but this, from 7:45 till 9:15, this is all accumulation. So this is 15-minute chart there. That's just accumulation. That is. So now if we're bullish, we want manipulation to the downside, and then we want to trade the distribution. That's AMD model, right? So on the 1 minute, this is how it looks. If you're looking at this, right, I need to get this top step still. So, you know, my monitor, I need to get a better monitor because I'm using the bloody TV at the minute. Right. So we actually didn't have 1 minute here, but you won't want to take that. Okay, so if you're watching this and you're not seeing a clean 1 minute, especially at this point as we're coming right to the open, then you drop to the 30-second, because when you get small 1 minute candles like this, you're likely to find a 30-second IFVG. This is going to be a trouble, isn't it? Because that's cool. And as you can see, where do we have our 30-second? Okay, here we have a 30-second. Okay, so I didn't see this earlier, but if you'd taken this 30-second, this close here, if you'd taken it, you would have got stopped out. So you don't want to be taking a long right before. This is why you don't enter pre-market. Okay, this is the 30-second. This is market open. Actually, this is market open. This is market open here. This is my first time looking at this. So as we come up here and we close on this candle here, you're 1 minute before, you can enter there. That's when you get this strong push up and you've got this strong close above this 30-second, that's a good entry here. You might want to wait to this one. You might even want to wait until market open and we get a push and then enter here. It's discretional. As long as we've closed above this 30-second, that's a decent entry. So a lot of people took this. I would have taken this today if I was trading, not working. And as you can see, we just go straight to TP. Just for fun, shall we see where break even would have been here, but it would have just shot straight through that. And TP would have been, I mean, again, you can 1 to 2, 1 to 3, 1 to 4, whatever you want to do. It's really up to you. In this case, at the very latest, I would have been coming out at that 15 minute there, because what we're doing is we're just putting our TP and or our break even at the most likely point of resistance. Wherever we feel like we could start turning around, that's where we put our TP and or our break even. So break even is at the nearest high here, straight away to go break even here, and then if we're pushing up, this is all low resistance liquidity. So all of this here is low resistance liquidity. We expect that to get run out with no resistance, but as soon as we get to this 15-minute gap here, which is here, that would have been TP. So let's have a look at what we've been looking at on that. Let's say we ended here, stop right below, I would say here. What's that, 19, 20 point stop? That's decent. Okay, why are you doing that? Okay, and yeah, 71 handles there, so that's a decent move there. Very decent move. That would have been the AM session trade. And this setup is printing every day. I mean, without fail, especially in the New York kill zone, you're getting yourself, I mean, I can't remember the last time that we didn't get a trade, you know. How long does that last? Sort of shortest trade is not even 2 minutes. That's quite rare that it bangs that quickly, but hey, when it does, it's all good. Right, yo, what's going on, Big M? Got Big M in the chat. Got the missus in the chat. Right, nice one for joining in, guys. If you take a win like that, you should be done, by the way. Yeah, we would not be continuing to trade if we were on eval or on a funded. All right, so just so you know, one trade and done. That's my rules anyway. That's how I move. I take 2 losses max, and then I'm out, or 1 decent win and then I'm out, and we come back again tomorrow. But just for fun, while we're here, I've got some food coming soon, so I won't be on for long tonight. I'm hoping that you guys took that trade and at least got some value from what I'm sharing, just so to see a bit more clearly. And also put any questions in the chat if you don't understand anything, and I'll try and answer it for you. If we were trading now, which I definitely wouldn't be, because especially after when you get moves like this, you should expect consolidation. I'd be surprised if we get another big move, but it can happen. You never know. But if we were trading now, I'd likely be wanting to sweep this high and be looking for shorts. But let's have a quick look. Zoom out here. Yeah, okay, so this is the new day opening gap that we were talking about from the 11th. It's quite a while ago now, 11th of December. And you can see we've tapped into that a couple of times. It's our third entry to this, which makes me feel like we want to get through this. And remember, we've got these equal highs here, which have been sitting there for ages, and we've been trying to get, basically, we've been longing up to these equal highs for since they were created. And look at how strong these 4 hour candles, and also inverting a 4 hour here now. We're inverting this 4 hour within the next 38 minutes, 40 minutes. If we close above that, then that's a 4 hour inversion. If we were to get a retracement, I mean, you could take a short, but if we were to get a retracement, you might be preferring a long, but it's difficult at this point because we've got a bullish gap here and we've got a new day opening gap here, so we're kind of in between two points of interest. That's on the 4 hour. If we wanted a small scalp, let's have a look. Go down to the 1 hour, see what we got. Yeah, so 1 hour's looking pretty bullish, so that wants to push straight into that. Okay, yeah, so shorts are on the table. Shorts on the table. If we can get to 50% of this, so we sweep this high here. Let's have a look what we're doing here. We're sweeping a high here. We haven't got that yet. If we swept this high and we got a V shape, like a clean 1 minute down, then I would short it. But I wouldn't short something if it was staggering about, and you know, I'd want to see nice volume on a trade like this because of the time of day and how much volatility we've already had. I would need to see a nice clean reaction. Let's see if we get it. Because this looks like, you know, it could be a reach, could be reaching for that liquidity. Alright, and let me just make sure I've got that line exactly where it needs to be, yeah. Okay, what high is this? That's 12, it's noon. Okay, it's in the 15 minute. Okay. 12:30, so it's just quickly check ES. What are we doing on ES at the minute? So we've got SMT on ES, so you can see, is that all-time highs? When did I mark that out earlier? Okay, so okay, we got a pretty decent SMT here. Swept these highs. If we sweep these highs here, there's the equivalent. Is that all the way down here? Okay, yeah. So if we sweep these highs and the ES stays below this high, then that's a decent SMT, enough for me to go in on a trade. But again, as I said, only if we get a decent, clean 1 minute IFVG. So let's see if we get that and we'll go in. Just so we can do another trade demonstration. Okay, and if we did go in, we'd be looking at a break even here. You can see we've got our 1 minute here. Previous weekly high. Thank you, brother. Okay. So as you can see, we've not swept that high. So even if we get a close below this, we wouldn't be taking it. And what have we got for a target? Remember, in this case, we'd be kind of trading a retracement because I'm bullish. Yeah, I'm feeling more like we're going to be running up to these highs. Not necessarily today, but I feel like we want to dig through this at least to 50%. So if we did trade this, it would only be a retracement. So let's find a sensible target. We've got a 1 hour here. So we've got 15 minute as well. Yeah, there's a 15 minute there. So that's your break even. That's why. Okay, 15 minute here, and we've got here a volume imbalance here. So I would target that 15-minute volume imbalance, because if it did come back down, it'd likely want to hit here and here. Let me see what the risk to reward's like on that though, because that would be great. For example, if we were to, let's just say we got an entry about here, I'd have a tight stop on this one. What would that be like? Yeah, we've got 2.4. How many handles? Only 16 handles, so you want to risk high on it. But it looks like we're getting an entry, but we haven't swept our liquidity, which means we've left equal highs. You never want to trade a short when you leave equal highs like this. That is just a no-no. Just doesn't matter how clean the entry is, you're not taking it. Likely go to TP, but that's not what we're looking for, unfortunately. A nice clean entry as well, but we won't be taking that. So that happens. That can happen quite often. You leave highs intact and get an entry. You don't want this to close below. You want it to be used as support, go a bit higher, sweep the high, then get an entry. If we get that, then we'll enter. We'll leave that in because we can still target that. Get a bit higher, we might target this. Yeah, so I hope that helps to sort of highlight the entry model. Yeah, and next week I'll be trading a couple of eval accounts. So from Monday next week, guys, we're trading 2 evals. We're doing a road to payout series. So trading every day, same time, PM session, and we'll be trying to get to a funded account, run up a 1.5 buffer on a 50k funded account or 2 50k funded accounts, and then reach a payout. With that payout, we then buy more accounts, and the end goal is to get up to 5 accounts on Top Step or whatever platform you're using, but I recommend using 50k accounts because that's what I'll be doing, just so everything's in sync. So if you want to follow along with that, you're invited, more than welcome. I'm also going to have my camera on as well, so you can see my beautiful face. I didn't have time to set everything up today, which is why you just got probably not a very good quality voice. But as long as you can see the screen, right, that's the main thing. So there'll be a lot of hanging around in these PM sessions, but that's all good. I'm gonna turn up some music for now. Let's get a prediction. sweep and turn around from here because of the way that price is lining up with these DRT levels here. As you can see, we tapped 50% here, and we move down, we tap 25%, which is the way around, but come down. Now would likely use this 25% here as support. Sweep this high, tap around this level, and then get a retracement. I wouldn't want to see this retrace now because we just don't get our entry. So if we also use that same methodology here, 1 second. Can you not know? There's 7 people. Oh yeah, sorry, I forgot. I turned the music up a bit. Let me turn it down. Alright, cool. So my missus just came in and said she can't hear me. Yeah, sorry, I turned the music up and I forgot to turn it back down. So quickly go back over that then. I'm putting these DRT levels here and I'm mapping out 50% of the range. Now, at the minute, this is 50% of the range, and this 15-minute volume imbalance is sitting in a discount of this range. Now, obviously, we're not taking this entry even if we get one, because we haven't swept the high, which is here. Now, when we do sweep the high, the range is going to be slightly higher, and the way that I can sometimes predict roughly where we're going to turn around is by looking at where price is reacting. So price often reacts at these levels. You see how we hit 50% here, then we retrace, we come back down, we hit 25% here. This should be 75, but just for now. And retrace, and then you'd want to see this used as support, and then we reverse from here, and then get our 50% retracement. As you go a bit smaller on the 1 minute, same thing applies. So this range here, from here to here, we've dipped into a discount. We would expect to see, there's a volume imbalance here and here as well. So we expect to see us move. Now that we've closed, we've got an entry here. We'd never take that because this high is still intact. And it doesn't matter that we've got that. We can call this a fake out. In fact, it's kind of good to see this because a lot of people would have gone short here. You know, especially if you get a break of structure, people are going to go short here. But you're never going to short when there's that high intact. Okay, we want to now see this as a retracement on this 50% discount, and then move back up and then get our entry from up here, the true entry. Let's see if we get that. I could explain a bit more about DRT levels over the course of these lives, but again, I'll just explain things in short. If you're not sure about something or you want more detail, then just ask me, yeah? So I'm not just rambling on. But yeah, these DRT levels here are a good way of predicting where price might turn around and where to. You're often seeing that support. If I do this a bit more accurately, I would actually put the level. If you put the 75% right here. Where I would expect to turn around would be about here. We'll see. It's always fun to just do a bit of prediction while you're sat here. Yeah, which is just above our level, so that's good. So just to train the eye, there is a 1 minute IFVG here. What's it? There is a 1 minute IFVG. We closed below that here. So if we had swept liquidity at this point, that high we're waiting for, then this would have been the entry here. But because we haven't, we won't be in there. Yeah? What's that? Would you not take it as price took previous day high? Leaving equal highs to be really. Yeah, no. So you could do that, and some people do. I just don't. The amount of times I've seen that as a fake out. You would never, or I would never trade away from equal highs or lows, and it's not necessary because there's enough opportunities where it doesn't do that, you know. So you don't have to try, and one of my things is not to try and squeeze every trade, you know. And you know, if you miss this, it's fine. Remember, this is also a retracement. We could very well get another entry as we get down here, you see, and that's what I'll be setting up for now. Now that we've got this entry and it's moving down, I will be setting up for the next one. It's unfortunate that there is this other high there, because that invalidates our trade, for me at least. You know, I just can't comfortably short away from equal highs and lows. So it's unfortunate that was there, but no, for me, I would never short this. And also because I'm overall bullish as well, so this is only a short retracement. I would rather wait for it to come down, and I'm now going to start setting up the potential long here, and I'll show you how we set that up. But yeah, no, good question, bro. But for me, no, I would never trade away from equals. It's alright now because I've turned the music down. Yeah, I can speak. Can you guys hear me? My voice now. I've turned the music down. Yeah, I know. I can't.
Speak louder. Why can't that one work?
Because I can't plug it into the computer. Because it's got the other thing next to it. I'm going to sort that out tomorrow anyway. For today's just a sort of a practice, you know, just to get everything set up quickly. You know.
Sort that out.
Yeah, let me know if you guys can hear me out. Yeah, I've got a thumbs up there. Yeah, the volume will be sorted out by tomorrow. Yeah, this is just a little quick test run. I just wanted to jump on, and I didn't want to spend bare time trying to get everything perfect. I just wanted to get it done, you know. All right, cool. So let's just say we start pushing down here and we want to get a long position. Where would we enter? Let's have a look. So this is again another continuation. It's not as high. I mean, let me have a look at this. Let me zoom out a second. Actually, what have we actually got here? Yeah, I mean we've inverted everything, and so I feel like 50% of this gap here, that would be the next target. Okay, so let me do some housework. Nice on mine, bro. You can hear, yeah? Alright, good. Yeah, so this volume imbalance is sitting in a discount of that range as well. So let's have a little look what we can get out of this. And what have we got here? Where's our inversion? What about here? Okay. Just draw that back in a second. Let's see if we can go on the 5 minute here. No resistance, everything's been run out here. So if we now, let me just see, how do we react actually to this level? Okay, so the next point of interest is going to be this order block here. Okay. I wouldn't expect us to go lower than that if we're bullish. So next thing I would do is I'd be marking out this from high to low, candle to candle, not wick to wick. So this is not ideal because that order block, I mean, it's sitting at 50%. Got the volume imbalance. This would be my area of interest to take a long from. Okay, I want to adjust this. Let's see how it looks on the wicks. That's now, that volume imbalance is now aligning exactly with 50%. So when we go on the wicks, which is gives me more confidence in it. If we get a retracement down to this area here, let me see what we've got on the 3 minute. I'm looking for gaps. I'm happy with that order block though. Now, there is the potential to just dump and go completely down. So I'd only take one attempt on a long here, and if that failed, I would just leave that, and I would expect that we'd be going down, because there is always a chance that we just come all the way down to New York Open and fill out all of this low resistance liquidity here. We want to get in on that short, but we can't unless we see that high, which is a shame, but it is what it is. So if we were going to try attempt a long, this is where we'd be taking it from. We'd just be waiting for 50% retracement, and are looking for a point of interest at that 50% retracement. Now, because we've got this 1 minute entry, and this sort of kind of looks pretty bearish, by the time we get down here, we have broken structure to the downside. So I would need a clean 1 minute straight through, one candle in, one candle out to enter this. I wouldn't be taking anything sloppy or slow in these conditions. And I also want to quickly check ES. Remember, we've got this bearish S&T with ES as well. Which is also making the long lower probability. Let's now move down to, I want to get rid of this, I don't need drawings on here. Okay, now I want to see if ES dips down as far. Zinc candle. What are we looking at here? Right here. This is the same range. So that's not macro. So you can see how NQ is pulling back, but ES isn't. That's a telltale sign that this is a liquidity, this is a reach for something rather than a true bearish move. So if ES keeps hanging around here and NQ pushes right down, that gives me more faith in the long. Is that understood? Because they should both move in tandem. They should both be moving bearish. But we'll see what happens. Let me mark out these levels here. So, why am I not seeing? I want to see here in a second. Okay, so that's in the 5 minute. Cool. A 5 minute, was it a 5 minute order block I was looking at? That's not a bit. Marked out differently here. Okay. So yeah, marked out big. Alright, cool. So this is the range we're working with. 1230, 1230. Yeah, I don't really want to see a small retracement. So here and here, it must have been on the 5 minute. There's my 5 minute order block. And this is my point of interest. Notice how NQ is reaching, but ES is not. So that's an S&T just sort of forming. Even though we've got a bearish one, I'm still more bullish. In my head, I think, my prediction is that we dig more up into this gap, because a couple of reasons. We've been digging into it a couple of times. We come down, we leave these equal highs. I expect a retracement and then run out those equal highs up into this gap. That's my trade idea anyway, so we'll see. And now I want to see if NQ reaches down. This is the same 5 minute order block here. Not in a discount on here. This is just about in a discount. We want to see, we need to reach into a discount, tap into this order block, and get a clean 1 minute out of it. The fact that ES is hanging around and not going down, I like that. That's good for me. That gives me more confidence to take the long. Let's see what happens. also we've got that volume imbalance as well. So let's see how price reacts around that volume imbalance. And get rid of all of this now. And you know how the trading game goes. Trading game's a waiting game. Nothing exciting about it. That's what we want to see. We prefer to dig up now, take out that high, and then get a short entry. That would be preferable. That would be a higher probability for me, especially now that we've had this fake out. It's drawing in short positions, create those equal highs. If we can run them out and then get a short entry, that'd be great. Big order block at the top. Excuse me. The big order block at the top. What type of frame are we talking about? Was it one on the 1 hour? Oh, at the top of this leg here. Talking about this one, or you talking about this one? What time frame do you mean? This one? Yeah, so this here, this is the old gap. Yeah, I guess this is an order block as well. It's kind of the same, except it just goes down to here. But yeah, I mean, at the minute, the only order block that we'd really be interested in or looking at would be if we were the most recent one, which this is this is an order block. It's not high probability, but we've already inverted that. What is this indecision candle here? What is that actually? So yeah, this is actually an order block here. So the level we've come up through that, and we're inside that order block, you could say. Alright, let me try and clean this up a little bit. Let me get rid of this. Just put that as 50%. What is it? New day opening gap on it. Alright, so let's just clear that up a bit. So if we had an order block to look at, it would be the one that we're in. And as you can see, we've tapped 50% of that a couple of times. But yeah, I guess it's worth. Let me make sure that I've still got my. Where's my level gone? Oh, look at that. It lines up perfectly. Yeah, so there's the high call. So this is so that what we're waiting to sweep is the high of that order block there. Yeah. If we get a short entry of that, then we'll be taking that to run out some equal lows here to run out, and we'd be targeting this area here. You mean the one price is sitting in? Yeah. I think that's where I should leave it. Yeah. Okay. So that order block is on the 1 hour. definitely looking forward to getting round to trading the New York AM. We'll have some faster trades, a bit more high octane. So say the one you removed, the one I removed was the gap, was the new day opening gap, and I've just put the 50% mark there because that's going to be a target if we long. And then this is the 1 hour order block. That's most relevant. That price is now sitting in and just kind of consolidating in and giving a lot of fake outs. You see how we're getting these strong black candles pulling people into short positions. When people see that, they're like, oh, volume's kicked in, now it's time, you know. But to be fair, I wouldn't want to be taking a trade until the next. Well, we're actually in the macro now, so this is actually a decent time for us to get an entry. But if you see this for me means this is accumulation. We're accumulating longs, shorts, and people getting chopped up in this trying to enter trades. But this is why we have key levels that we wait for. We're either having a sweep or we want to come down and tap into this order block and a volume imbalance. There's no other trade on the table for us. Tommy, nice one, brother. Did ES take the high? Nice. That does, yeah. Okay. If we do get, if we was to get a, let me just see 1 second. Now that ES is, my boy Tommy just showed me that ES has taken out this high, and because we've got this bearish SMT, a pretty decent one here, that would validate a short position for us. Even so, I would still prefer a sweep above before we went down, because I feel like it's drawing in short positions here. I feel like it wants to run that out. Let me have a little look here. What we're actually working with. So the entry was here, another entry here. Got the equal highs in here. Look on the 5 minute, yeah. I think that would get some volume in here. There's a potential short here. I just don't feel comfortable with it. So for some reason, because of these equal highs now, and the way that it's been pulling these short positions in, I just feel like it wants to run up one more time. We've had our accumulation. I want the manipulation before the distribution. I wouldn't want to just take a short straight out of this position. So many times I've seen, you know, the model for me is the AMD, you know, and that's where I've not got my manipulation, so I'm not comfortable taking that short. I'd be happy to fade this trade. I would want to see these highs run out. At least this high. At least this high. And then get a 1 minute. So that's what I'm gonna wait for. This just feels like it's trying to pull people into shorts, you know what I'm saying? It's trying, you know what I mean? So I want it to run these highs here, and then I would take a 1 minute after that. If it goes without us, then that's fine. Sometimes I'm happy to just fade a trade, especially if I've already taken a win. But it may well dump from here. It's looking pretty bearish, but I need a sweep. What happened on ES? Did ES give us accumulation? That has actually given us a nice manipulation to the upside. It's given us a 1 minute as well. ES has given us a nice entry. So it's trying to pull me in. It's trying to pull me in. But these are not high probability conditions, just to be clear. And obviously, because I'm on a demo account, this is actually a 15-minute inversion here as well. I just don't like how NQ is looking. I don't like it. So each to their own. If you're trading an eval or you're trading a funded or whatever, this is not a high probability trade. So I wouldn't even take this on. I might take it on a challenge, low risk, but I definitely wouldn't take it on a funded. Unless it sweeps that high and then gives us a clean 1 minute, then that would be different. But this, if this just starts dumping, I wouldn't take it. Yeah, so in order, in short, to answer the question, Tom, the fact that has happened, like if he was trading ES, you know, that might be an entry. But as a rule, I really am reluctant to trade shorts with equal highs on NQ. It's just something I don't do. So having a look at that, but I will take a second and a third look at everything and then go, okay, is it worth it? But just intuitively, this doesn't feel good to me. Look at ES now. ES is kind of hanging around here, whilst NQ is still pushing down as well. So that still looks bullish to me. Shadow sweep as well. That's a nice rejection candle. But you see all this? You see this? See when you hit a level like that, and then you get this, and then it's 1 minute. Look, see how that 1 minute's holding. You see this? This is a terrible entry. If you see that high and then we come down, you'd want to be seeing a run straight through that close below. This means we're likely still bullish. Go back here now. Look at how much NQ is really pushing down. ES is hanging around. So I'm still bullish in my head. I want longs, and if I get it out of this, let me take it. This order block. Let me check the 30-second. See if I can get a decent 30-second out of this. So this to me looks like a reach for liquidity, a reach for an area. And if I look on the 1 minute, 1 minute all the way up here, I would be confident in taking a 30-second on this. Yeah, that's a nice sweep on liquidity. This is our 30-second here. And in my head, I'm still bullish. So if we get close above that, it'd have to be a decent one though. Still want this volume imbalance though. Ideally, I want to tap that and go. Just gonna get rid of this. Let's put the high in. Where are we at now on an hourly candle? That's what that volume is. Alright, let's see what we get here. We have, let me just double check that we've actually dipped into a discount. There it is. Actually entry discount. I want to see a nice bullish reaction here for me to enter. Let's see a big wick on this candle. Right, that's the volume imbalance. Here we've got a 5-minute. So if we close below that in the next 2 minutes, we'd have a 5-minute inversion to the downside. I wouldn't be confident in longs after that. I'd want to see reaction within the next 2 minutes and a move up. This may be our next 30 second. So we've had our retracement to 50% of the range. We've cleared out our volume imbalance and we've tapped into a 5-minute order block. If we get a close above this 30 second, I want it to be a nice clean close, then I'd be entering. I would take this trade on an eval. I don't know if I'll take it on a funded. Low risk, I probably would take maybe 1 or 2 micros. But let's see how these candles react. That's what matters. We've got 1 minute and 24 seconds until this closes below this 5-minute. We don't want to see that. That would invalidate the trade for me. We need to see this. We need to see this IFVG within the next minute. So just to recap, this is considered accumulation. This is accumulation, okay? This is our manipulation, and we want distribution up to these equal highs that we've left. Come on, let's get that push. Well, it looks like we're going to invert this 5-minute, so we could very well be bearish here. So I'm not interested in this. We've inverted that 5-minute. This looks pretty bearish here as well. We've tapped a few times into this gap and pushing away. If we get close below this here, then very likely bearish. Yeah, so no trade there. That doesn't look good to me at all. Long position or next long opportunity. That's going to give it to us now, isn't it? There's a 1 minute there as well. Unfortunate that we've inverted that 5-minute, because that's a nice reaction there. We swept this low. Yeah, so I wouldn't enter this on an eval or a funded account, but we may enter just for the fun of it. We need to close above this 1 minute. Yeah, so this is good that you can see this, because you see how this 1 minute here, this tiny little 1 minute holds. This is what I like about the 1 minute IFVG, is that if we are bearish, it very often holds bearish, and you won't get the inversion. That's why I like it as an entry model. It's happened so often. It's very rare that you get the inversion and then it still continues down. It happens, but it's rare. So this is kind of what you can gauge whether you're bearish or bullish just with a 1 minute IFVG. Did we get, oh, that's a 30 second now. Did we get a, yes, there's your 1 minute there holding at the minute. Did we get a 30 second? that's actually here as well. So that's a nice strong push there. Go back to the 1 minute. So your own discretion. If you're not bothered about this 5 minute inversion to the downside, you know, then happily take the trade, but I would low risk it if you're going to take it. And you need a strong, good looking close above this 1 minute. That's not what you want. See that close there, that big wick? You don't want that. So that's a close above. That's an inversion now, but you can't. You wouldn't want to enter on that. We're reacting off a 2 minute here as well, bearish 2 minute. And if you look at it, if you zoom out a bit, it's looking very bearish. So even though you get that close, it's not clean enough. You can see it looks like it's just reached up for that 2 minute. So I wouldn't be taking that at all. So once you see that price is going either way, the next question is where's the next draw on liquidity? So if it comes down and inverts this order block and closes below this order block, then we can be pretty sure that this next high is the draw on liquidity, at least that high. So we'd be looking to take a long position again. If we're taking a long position, we want a sweep of liquidity, which would be a decent sweep would be here, and we would also want 50% of a range. So that's a 15 minute here. The next decent range is from this low here to this high here. So we would need to get at least down to this area here. There's a fair value gap resting in the discount here, 15 minute gap. So that's, I'm just looking for a point of interest in the discount of the current range. What's this here? We've got a nice push there, nice 1 minute there. Yeah, so I'd be happy to enter on this type of reaction. We've respected this area, so I'd enter there. Just on the challenge, it's completely up to you if you want to enter on your own account. I do expect us to be bullish now that we've had this reaction here. Let me check the 2 minute. Yeah, we've inverted that 2 minute as well, so that would be an entry for me. Stop. Oh, let me get rid of some of this stuff now. Stop below, I would say these lows here. As our 1 minute is there, this low here. We've also got this, which is a volume imbalance, I believe, yeah. So I'll just be tucked below this volume imbalance and this candle, strong rejection here, so I don't expect us to reach back down there again. And now we're in for the longs that we were initially wanting. So just to recap, why did we enter here? 50% retracement. Go get the range we were in again. Yeah. Let's see what ES did here. ES actually come down in the end. As you can see, we came right down and swept all these lows here, and ES did not. So there's a nice SMT there, which was giving more confidence on the entry. Yeah, stop below the volume imbalance. And TP is going to be, I mean, look, we don't want to be greedy. It's low probability these times here. This is a nice 15-minute wick. We've got a nice push up there. 3 minutes to the close of this candle. If we close above this gap, that would be ideal. And TP can just be, look, I mean, 1 to 2. It's just perfectly at that high there that we've been wanting. That is correct, isn't it? Yeah. So let's see how this plays out. If we are bullish, then it's a decent trade. let's see how would we manage this trade. Well, break even would likely be. What do we want to see? Hold. Nice 1 minute, nice entry. I'll be likely moving that to break even. It's not the best break even, but I'll be moving to break even at this point here. Sorry, not that point. This point here. And then you let it play out. And that's all you can do. Yeah, so if we hadn't had a 5 minute inversion to the downside, then I'd be a lot more confident in this trade. It's a shame that we inverted this, but you know, we have respected this order block. We have got a 1 minute here, and we've actually inverted another 1 minute here now, and we've closed above this order block. And this is in fact a unicorn. Once we get above this breaker here, we have a small fair value gap just here, right around the level of this breaker. If you look here, this is a fair value gap for a bearish. This is like a balanced price range here. You can see we tap down into that balanced price range here. This is the balanced price range between here and here. So between this and this, there and there is a balanced price range. And you see how we've tapped into that and tapped into that again. Got a nice reaction from that. That's a good bullish signature. That we want to see that. They're giving more confidence in the trade. This is a bearish gap here. We could see and should see resistance here, but we really want to see this balanced price range hold. Why break even here and not here? Well, because this is where the selling began. So this, you could put it here, but at that point, you know, to be fair, you're probably just going to run, once you get to this point, you're likely to run straight to TP because you've just got equal highs, like low resistance here. But I've seen it very often leave, you know, it likes to leave equal highs and lows. You come here, leave these two equal highs, and it's got liquidity from this candle here. So it's a good question. This candle here, there's liquidity here. Here, you get me? And it doesn't need to go there. It could just run here, leave equal highs, and then come and then dump. So that's why I chose the top of the strong move down instead of the swing high in this case. But a lot of the time these levels are the same, so you won't get this difference, but that's why I've done that. So many times I've seen it run this candle and not that one, and then come back down. So I'd be happy to go break even there. By the time we get to that break even, we would have inverted another 1 minute as well, so I'd be expecting that to hold. So when we see retracements, we want to ask, where is it going? What does it want? What's it seeking? So the potential is this volume imbalance here. I want to see this balanced price range hold. For me, that is a very strong support level. So I wouldn't want to see us close below that. But if we did, I would allow it 50%, and I would allow it these volume imbalances. But 75%, I wouldn't want that. And so therefore, you can take some risk off here. By the time we get to 75%, I'd want to be out. You can take 50%, you can get your volume imbalances, but any lower than that, I'd want to be out. So you want to take, that's still $20, you know, might seem small, but over time, this little risk management makes a big difference. just going to try and tidy up a little bit here. Yeah, get way too messy. We all know where the levels are. We know what we're doing, so we don't have to have it all on there. The 1 minute we entered from, that's the only thing, which has also turned into a balanced price range. This is the 1 minute, this is the balanced price range, that's the support level we expect to see hold. Even though I locked some of them, still deleted them. Rubbish, stop. Okay. Because we've not really had a deep retracement, when we do move to break even, we could take a break even trade here, which is fine. Nice push. This is another inversion here, which is good. We push straight through this, a little bit of reaction and a nice strong push. That's lovely. That's what I want to see. I would move straight to break even here, although we're likely to get a retracement. It is what it is. That's just the rules. When it comes to break even, I don't mess about. And you know, it's discretional. If you feel like you're happy for it to take another tap on this balanced price range, you might want to put your stop here. You know, just leave 37 on, because we may very well. And also another thing to do here, now that we've pushed up a bit. 1 second. Now that we've pushed up a bit, you might want to range it again. I would just go from the bodies. Okay, so now look at that balanced price range sits pretty much at 50%. So I would, in fact, now having seen that, I would go to this low here, this candle here, and just give it a bit of space. If it might want the 50% and it might want that thing again. If it does, I'm happy to leave 40 on the table. No big deal. Just, you know, it's worth leaving a little bit on for the potential of staying in a trade which is looking decent, you know. Ideally we don't want that retracement, but in this game, you know what it's like. You've got to risk something. You can't just be, you know, you say I'll break even here, break even there, but if you look at that price and you do your range, you know, and now we've pushed up again, your range is now here. You see, 50%. That'd be a nice tap for it. If it did come down and it tapped here, you would expect it to hold here if we're bullish, and you'd want to be out by here. You don't want it coming back below this breaker and order block, and you don't want it running through none of that really, you see. So yeah, just leaving a bit of risk on is always fine, but just not too much. Alright, so 2 minute. About 2 minute here. Nice placement, yeah. 2 minute. Look at the 5 minute. Yeah, nice and bullish. Happy with that trade. I'll make sure I've got my TP in the right place here. Yep, we want that high. So this is why I don't like to short equal highs, because I mean, and even if you did short this from earlier when we came up, this 1 minute you'd have stopped out here, and let's just say you re-entered on a continuation, ended here, you've got this little tiny move here, because all day long wanted that these other equal highs, and it may want to leave another one. It does that, especially in the PM. Loves an equal high and equal low, but this trade has been entered correctly and managed correctly. You can't do any more than that. at our 50%. What it looks like on the wicks. The candles. Notice how price is reacting at these DRT levels. Got indecision candle at this level. We move up, we get resistance at 50%, we invert it, and then we get support at 50%. Same happens at this level. We go through it, we use it as support. Just notice how price reacts at these DRT levels. You would want to see, ideally, you'd now want to see this level hold as well. If we're still bullish. Yeah, there is always a chance of a 50% retracement, but this level here should be good support. We should run to TP now, as far as I'm concerned. So, to recap on these trades, on this second trade, we were almost tempted into shorts, but we didn't because ES wasn't. There was a few things that we used to determine whether we should or shouldn't go into different opportunities. That short opportunity was it was scrappy. It was lethargic. And we had equal highs left intact, so I was never going to short the equal highs, and so therefore the equal highs told us not to short. That's how you look at it, you know. We waited, we were patient, we waited for a 50% retracement. We marked out our key areas, which was order block and a volume imbalance, which we got a nice reaction from. We marked that out ahead of time, and our entry wasn't the cleanest, to be honest. This is not the cleanest entry. Alright, that 1 minute there is quite small. There's a 1 minute here actually, in hindsight, but again, we saw that, didn't we? And it was a very, very rubbish close above. Then we had this massive indecision candle. We were digging into a 2 minute, but as soon as you get pushed like that through a 2 minute, you invert a 1 minute and a 2 minute, you're entering all day long there. Alright, we got a balanced price range here. We dip down into that, and we get a nice big push away from that. By the way, at this point we're going to be at break even for sure. If that comes back down now, we ain't giving the market none of that money. Some people might just want to close their trade here, you know, and just take the money, and that's fine. You can do that, you know, because, you know, if I was on a funded account here, I would be tempted. I would have been tempted. I think we reached up to what, like 180 here or something. I can't remember, but it's not a good habit to get into. Just try and allow your trades to reach TP. Yeah, but everyone's got in different situations, so you're gonna do what you're gonna do. So we didn't take the short because they had equal highs. So we waited for those equal highs. We waited for 50% retracement. We waited for a 1 minute. We got a nice move, and this is what happens when we're patient and we don't try and take every trade that appears. We faded the trade, you know, and that was a good choice. So 510 on the day, 2 decent trades. Love that. And yeah, I'm hoping that I'm explaining it well enough, and I'm kind of like, this is my first time explaining it properly in a live whilst trading, so hopefully it makes sense. Hopefully you guys took a trade, and you know, whether even if it was on a challenge or eval or whatever, let me know if you did. You know, W's in the chat if you did, all of that. But yeah, man, thanks for locking in, guys. Obviously, make sure you give it a like, thumbs up, all that stuff, because you know how this YouTube stuff works. We need to get it popping. I think we done a recap of the AM session. Yeah, we did, didn't we? Yeah, cool. All right, so I'm going to be on same time tomorrow, 5:30. There'll be times where I might be on at 6, but I'm going to be getting back from work as soon as I can and trading live every evening, same time, yeah? And we're going to be paper trading this week. Then next week we're going to be starting Road to Payout series from Monday. I'll be opening 2 new challenge accounts, and yeah, let's get this money together. Hope you enjoyed the stream. Peace, man.